Hey everybody on YouTube, what is going on? I pray you guys are doing very well. I'm getting people on Instagram over here so that we can get started with today's live. All right, so they should be coming in. I pray you guys are doing really well, and I pray that you guys can hear me very well too. So today is going to be really, really good. You guys, we are going to be talking about unlocking your four-figure profits, right? And it's primarily going to be through swing trading because I am a swing trader. Now, I want to also preface this. Hey, Polsky, how you doing, sweetie? I want to also preface this with saying that um, even though I swing trade, I also teach people who scalp the market. I also teach people who day trade the market. But I like to stay on higher time frames whenever I am teaching or whenever I am personally trading. But what people who are in my community have learned to do is they use the blueprint that I give them and they learn to scale it down in time frames. We're also going to be talking about a little bit of that too today. All right. So, hey, everybody, how you guys doing on Instagram, YouTube, and Trading View? If this is your first time meeting me, my name is Shaquan, and I am a Forex coach. And if you're here, well, I'm reckoning that you are wanting to learn from a coach, right? I've been coaching for about, God, how long have I been trading? I've been coaching for about 4.5, 5 years now, and I honestly love what I do. I wouldn't have it any other way. And I get asked a lot. I get this one question a lot. How long did it take for you to become profitable? I didn't start seeing profits until my second year of trading. I've been trading now for going on 7 years now, and my probability, I'm going to put it in quotation marks, goes up and down, but I like to look at it in months. There are some months when I make money, there are some months when I don't make money, and there are some months when I break even. But my goal is to be profitable. I don't look at it as being consistently profitable because consistency can take some time, no matter how long you've been trading for, right? So yeah, let's go ahead and let's get into it. Now, if you're a person who you're trading and you're not liking your results, and I'm going to say as far as money because that's what I see most people look at. They're looking at their results when it comes to trading. One thing that I can say about this is prop firms are it, right? Prop firms are in. They're here to stay. They've been around for actually over 100 years. I don't know if you guys knew that, but prop firms are not new. They have been around for decades, for a century. And it's actually a cool little fact there because I know now prop firms are becoming more popular because people don't want to trade their own money anymore. And I honestly don't blame any of you guys who don't want to trade your own money, right? So let's talk about this part here. I see this one problem a lot in the trading community, and it does, like I said, have to do with profits. You may not be making enough money for your trade ideas. Like the concept of us trading is the fact that we're trading to make money. That's it, right? We're trading to make money, add value to our life, increase the quality of our lives. But if you're not happy with the results that you're getting, then you're going to be forcing trades, over analyzing trades, and even questioning if trading is for you. I'm going to move my microphone here too because I just realized some of you guys may be on my YouTube. My mic is all the way over there. Hey, Mike. Okay. That's funny. All right. So, when it comes to trading, I'm going to say it this way. In order for you to make four figures, you need to be trading with five figures. Okay. I'm going to say that part again. In order for you to make four figures, you need to be trading with five figures. All right. Now, here's why I say that. If let me just use me personally for right now. When I first started trading, I was trading with like $100, $200, at most $800 because that's all I could afford at the time. And what I realized was even though I'm trading, I'm having to over trade in order to make hundreds of dollars. I'm having to use higher lot sizes, standard lot sizes, knowing that I could blow my account and I didn't have the money to keep funding an account, right? So I realized early in my journey, if I really wanted to see some type of success, and if I didn't want to overanalyze or feel depressed when I was trading or like sleep because I don't want to see the market move, I need to have some real funding in my account. And there's a millionaire who I know, and I was talking to him about the situation, and this was years ago. And one of the best pieces of advice that he gave me, which was so fundamental to my trading, he said, Shaquan, if you want to make money, get capital. You need money to make money. And this is why I say that prop firms are in and small accounts are going away. You can take $100 and with a really good strategy and with really good risk management, turn that into $10,000. Because there are some prop firms that say, hey, if you give us $100 or $120 or $125, and you prove to us that you're worthy to trade our money, we'll give you $10,000. There are some prop firms that say, hey, if you give us around $500 with a good system, same set of rules, we'll give you $100,000. And then there are some prop firms that say, hey, if you give us $1,000 with good risk management, a really great strategy, you prove to us that you can trade, we'll give you $200,000. And I want y'all to think about that. Having that type of growth, I got cars coming by, but having that type of growth is really quicker and is safer than trying to turn $100 into $10,000 really quick, or $500 into $100,000 really quick. And most traders, it would take years to be able to do something like that, right? So, it's quicker and you're not going to be on the struggle bus. So no more struggle trading, you guys. With a prop firm, you can afford to trade less and choose the quality of your trades over the quantity of your trades. And we're going to get into that a lot more. Now, I want you guys, if you're listening to me, please have paper, pencil, something, even if you're using your computer, because y'all, we're about to get into a lot of information. It is going to be math involved, but I want you to rock with me. And the math is going to be so, 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 so simple. I promise you guys. Okay. Hey, Ryan. Hey, Miss Cash Money Cows. I like your name. I love your name, Miss Cash Money Cows. That is so cute. Okay. So, y'all, let's talk about it. Okay. One of the main points of, or one of the main things that you need to know when it comes to making four figures is you have to implement a proper risk management strategy. And this strategy has to do two things. The first thing it has to do is it has to make you money. That's it. The strategy has to make you money. The second thing is it has to protect your capital. It got to protect your capital. If your strategy isn't doing two of those things, you're just trading with the wind. You're probably being thrown in so many different directions. I was there for a very long time. I did not like that feeling. And honestly, prop firms have really settled me down. I have to be honest about that. Now, I still trade my own account, which is a small account. It has a few grand in it. But at the same time, a prop firm, knowing that I'm going for 5-figure prop firm accounts, 6-figure prop firm accounts, prayerfully by the end of the year, it'll be $1 million prop firm account. But the mindset has to change. And the two things that I have to remember is, one, I have to make money, and two, I got to protect my capital. That's the biggest thing when it comes to trading. So let's talk about that now. There's a golden rule that says that you should not risk any more than 1% of your capital. And here's the reason why. I think because, for one, that's the best way you're going to trade without luck. And I want y'all to hear me well on that. That is the best way you are going to trade without luck, because you have to make money trading a skill. You have to be very skillful to trade this market. Now, there are some people who do make it big and they do make it rich by getting lucky. When it's a bull market, all they do is buy. But have you ever seen people, like, once that bull market is over, they lose everything or the majority of their money because the market came down crashing and they did not know how to maneuver and how to adapt? They got lucky. But we can't always depend on luck. That's the biggest thing right there when it comes to trading. The second part about your risk management strategy and why you're going to risk no more than 1% is because that's the worst you're ever going to trade. And that is still without luck, because you have to risk the money while you're learning the skill. So the more you demo trade, the more you back test without luck, you're actually required to learn based on your skill of trading and how much you know and what you're learning and what you're implementing. All right. This part is very important. Now, as your account grows, so does the amount that you trade with. And I want y'all to listen to this number because I get asked a lot about lot sizes and how do you know when to scale up? I'm going to tell y'all a really good secret. It's not a secret, but it's a secret to some. Okay. As your account size increase, you're automatically scaled up. There's nothing that any of you here need to do to say, well, let me go ahead and increase my percentage. You don't even need to increase your percentage in order to make money. That's the beautiful part about trading. So if you had a $100,000 account and you risk 1%, that's $1,000. Let's just say that you win $1,000. When you risk 1% of the $1,001 or the $101,000, your risk increased to $1,010. Let's say you win that $1,000. Let's say you just win, I don't know, $4,000 or $5,000, right? If your account is now at $105,000, when you risk 1%, now your risk amount is $1,050. So that's why the more money you make, you can still keep your percentage the same and you can still make money without changing anything in your system. Y'all, it took me a long time to learn this, that we change too many things. You don't gotta change a lot in order to be a really good trader. Hey Kaya, how you doing, sweetie? Like, you really don't have to. Okay, someone said, but in the prop firm, 1% risk is 10% risk. No, 1% risk is not 10% risk where you can easily lose all your capital. We're gonna get into that. Trust me, I got you. We're gonna get into that because I've traded with so many prop firms. I've helped a lot of traders with their prop firms. It's all in the math. It's all in the math and how you manage your trades. And we're going to get into a lot of math because some of you may be getting into these prop firms. You may be getting into these prop firms not understanding what you're doing. And you haven't really strategically planned out your trades, and especially how many trades that you have running at one time, and it causes you to lose accounts. Trust me, I can still, and I recently did lose an account because I had too many trades running. I didn't hit my max drawdown. I hit my trailing drawdown. So there's a lot of things that you have to adhere to when it comes to these prop firms. Okay, that's why we're going to talk about it. All right. So let's get into leveraging position sizes based on your account size. I want you guys to type the number 1 for me if you know how to calculate your position size. Give me that. Give me the number 1 if you know how to calculate your position size. Give me the number 2 if you don't know how to calculate your position size. I want to see where you guys are. I like your talking. Thank you. I appreciate the comment. Okay, the compliments. Give me a number 1 if you know how to calculate your position size. Give me the number 2 if you don't know how to calculate your position size. And we're going to talk about that, okay? Now, number 1, I see a number 2. Okay, awesome. So y'all are bringing them in. Okay, so if you know how to calculate it, great. If you don't, we're going to talk about it. And if you do, we're still going to talk about it. Okay, so your position size is the amount that you value each pip at, or price interest point, because in Forex, we deal with pips. Okay, so pips are changes in the exchange rate. Now, if you're looking at me through Trading View, then you can see my chart right now, right? I'm actually in this trade, as a matter of fact, on Pound USD. If you're on Instagram, I shared the Pound USD trade with you guys yesterday. So if y'all on YouTube or Trading View, make sure you follow me on Instagram. Make sure you follow me on YouTube and through my Trading View, okay? But I'm gonna have to switch over screens on YouTube really quick. So every time, and let's see where we're at right now at 1.23755. Okay. So let's just say that price was up here at 1.25000. That means that £1 would cost $1.25, right? Now, if price ended up moving down to 1.24, which it did, 1.24000, I'm going to try to get it as even as I can, then that means that price moved 100 pips. The question is, when it comes to trading, is based on 100 pips, which in this example is 1 full cent, from 125 or $1.25 to $1.24. 100 pips equals 1 penny. Okay, how many units or how many pips were you able to profit of those 100 pips or more, depending on how you're trading? Okay, and at what value do you value every single pip? Do you value every pip at $1, $2, $3, $4? And based on your stop loss and your take profit, that's how you know how much you're going to make. That's how you know how much you're going to lose. But here's the thing when it comes to that, okay? It's three numbers that give you your position size. And I want you guys to write down this formula. I'm going to always say this formula. I speak this formula every single week. Like, you just have to know the formula, okay? Here's the formula. Your account balance, write this down. Your account balance, not your equity, not what's running, is your account balance, your capital. What is your balance at right now? Like, it's there, okay? Times your percentage risk or risk percentage, however you say it. Meaning, do you normally risk 1% of that account balance? Do you normally risk 0.5% of that account balance? Like, what is it? Okay. So that's that. So your account balance times your percentage risk or risk percentage, okay, divided by your stop loss in pips. It's just three numbers: your account balance, your risk percentage divided by your stop loss. And we're going to do a lot of math today. All right. That's what determines your position size, aka your lot size, or aka your unit size. Those are the three same numbers. Okay. Now, here's why you want the right percentage. You want the right position size so that y'all don't blow accounts. You're not blowing accounts out here. You also want the right position size so you don't lose too much of your money. Like, how many of y'all have ever blown an account because you risked too much money, because you didn't know what the lot size was? Like, you actually just chose your own lot size. You said, well, I'm gonna just go ahead and go all in, or I'm just gonna risk $10 a pip, or I'm just gonna risk $1 a pip, but it was just too much for your account to handle. And because you had so much leverage, you thought it was gonna be okay. And turns out it was not okay. Or how many of you have ever lost too much money in one or two positions or a few positions because you're thinking, well, I got this $1,000 account. I'll be okay if I just risk 250 of that. Then you decide what your lot size will be based on your stop loss, but still it's too big. Too big is an actual thing. Okay. Ryan says, here, here. Right. Too big is an actual thing, contrary to popular belief, ladies. We know. Okay. So I'm just saying there. All right. Now, here's the thing. I said earlier that in order for you to make four figures, you do need a five-figure account. Think about prop firms. That's why they're motivating you to get five figures, the $10,000, $25,000, $50,000, going up into six figures, the $100,000 account, the $200,000 account, right? So if that's the case, I want you to think about this. Your five-figure account will with limits, okay, with limits, the drawdown limits, they're going to dictate how you make your four figures. So let's start with this. Let's start with a drawdown example, and then let's start with a profit target limit example on a $10,000 account. Once again, if you got pencil and paper, you're gonna be ahead of the game. Okay, so let's go ahead and let's get into some numbers. Let's just say that your capital was $10,000. You decided to go with a prop firm. I use Funded Trading Plus. All right. If you're on Instagram, then I have a link in my bio. All right. So if you're on TradingView, I also have a link in my description. But let's go ahead and let's talk about it this way. Okay. So if you got a $10,000 account, if your risk percentage per trade is starting off, I'm saying starting off at 1%, then $10,000 times 1% equals $100. That means for right now, at your first trade, all right, you can't lose any more than $100. But that also means based on your reward to risk, and we're going to have a whole section on this, based on your reward to risk, you can make more than $100. All right. Now, I want y'all to do some math with me really quick. Okay. So if you have this $100 risk amount, how many trades at 1% will it take for you to reach $1,000? Because most prop firms want you to reach 10% when you trade, right? So if you needed to make 10%, which is $1,000, and your risk percentage is $100, think about it. Think about this. How many trades would it take for you to reach that 10%, that $1,000? Who has the math for me? Whether you're on Instagram, TradingView, or YouTube. I don't know why I can't see the live chat on TradingView. That's kind of weird to me. TradingView be tripping with their stuff sometimes, but it's okay. All right. Now, if you don't know the math, and somebody just got it for me, thank you, DG. You're awesome. He said, he or she, I can't see your name, said 10. Kaya said 10. Hey, Kaya. Kaya said 10. And that is right. It'll take 10 trades because $1,000 divided by 100 equals 10 trades. Someone said it depends on the pip amount you're going for. We'll get there. But for right now, let's just do simple math, right? Simple math. It's all right there. $1,000 divided by $100 equals 10 trades. So here's what this is telling you. This is telling you that you can reach $1,000 in less than 10 trades. That's what this number is telling you. Is that easy to reach? No. Sometimes it takes more. Sometimes it takes less. Sometimes it's going to be based on the market conditions. But this is a possibility. It's an estimation. Now let's talk about the drawdown requirements because sometimes we forget about the drawdown, right? But if the drawdown requirement is 5%, and that's for most prop firm, and I'm going to talk about the daily drawdown. I'm not even talking about the overall drawdown. Because one thing I teach my people is if you reach your daily drawdown, you may reach that quicker than the overall drawdown. And that daily drawdown is the main number you want to stay below when it comes to a prop firm. Okay. So if you have a daily drawdown, let's just say it's 5%, then $10,000 times 5% is equal to $500. So that means that you cannot lose $500 in one day. So if you're risking $100 a trade, but you can't lose $500, that means that you cannot have 5 trades running at the same time towards the negative. Because if so, you have a higher probability of losing the account. This is a number that you want to stay under and focus on. So if you're a scalper or a day trader, or you're a person who typically runs your trades for a little bit longer, just be aware of your numbers when it comes to trading. All right. Now, to make 4 figures with a $10,000 account, because technically that's still a small account. Hey, King Isaac, to make 4 figures with a $100 account, you can't lose 500 in a single day. But let's talk about the position sizing, because that's the true thing that we need to really talk about to make your 4 figures, right? So your position size are based on your average stop loss and time frames, because that's going to vary. Like if you're using higher time frames, your stop loss is going to be higher. If you're using lower time frames, your stop loss are going to be lower. And in these examples, you'll hear the difference, right? So let's just talk about the $10,000 account again. So let's just say that you have a $10,000 account, you're risking 1%. And in this specific trade, let's just say your stop loss is 30 pips, right? So $10,000 times 1% equals $100. Okay. I think we can all agree at that point that that's what that equals. All right. Now, if you have this $100, you're going to divide it by 30 pips. Now, 100 divided by 30 is equal to 3.33. Now, let's go back to the pips that we were talking about earlier. The value. This means that every time price moves a pip in your favor or a pip against you, every pip is worth $3.33. Okay. Your position size, which is your lot size, is 0.33. Simple math once again. If y'all have a calculator, you may want to do the math with me. Okay, so you can see exactly what I'm talking about. I know there are calculators out there. TradingView has an order panel. There are risk calculators that can give y'all these same numbers, but I like to do my own math because it's quicker. I don't want to go on a website, or I just use TradingView's order panel. But $10,000 times 1% equals 100. 100 divided by 30 pips, if that was my stop loss, is going to be equal to $3.33 or 3.33. That's the numerical amount. The lot size is going to equal 0.33. All right. Now, if I had to take profit of 100 pips to make this easy math, if I had a take profit of 100 pips, 100 times my lot size, 0.33, equals $333. That means that your risk to reward is a 1.33 or 3, depending on how you say this, 1 to 3.33 if you're looking at a risk to reward, or reward to risk of 3.33 to 1, or your R multiple of 3.33. Okay. So you risked $100 to make $333. That's three figures. But once again, remember, we said that you still need less than 10 trades in order to reach $1,000. Your four figures, right? So, of course, you have to keep trading in order to get this amount, right? Now, let's do another example with your stop loss. Now, this example, we just used 30. In this next example, let's use 20 pips, okay? So, if you have the same $100 risk on the same $10,000 account, and your stop loss is 20 pips, if y'all can still do the quick math, 100 divided by 20 is equal to 5. So this would be $5 per pip. Your position size or your lot size is going to be equal to 0.50. So as y'all can see, in both situations, both of the lot sizes are different. I am not choosing the lot size. The risk percentage and what your stop loss is going to choose what your lot size is. Because as I've stated earlier, if you've been choosing your lot size, you're kind of not doing yourself any justice, because you could be risking too much money, or you could be undervaluing your trades. Let the account do it for you. Let your strategy do that part for you. Don't do the hard part. Don't do the part that could cost you money and cost you sleep. You see, so it's really just keeping you safe, because remember, you got to make money and protect your capital. That's what a risk management strategy does for you. Okay. So if you had a take profit of 100 pips, then that means that you can have a return of $500 just by risking $100. But in this example, we got the stop loss 10 pips lower, and that is possible. Okay. So keep it this way. In order to make your four figures, if you're going to be trading a smaller prop firm account, you want to make sure that you have higher reward to risk trades. And I'm going to talk you guys through on how to do that. Okay. And you want to make sure that if you're risking 1%, you're only going to lose that 1%. Okay. Very, very, very important there. Now, what if you had a five-figure account? Because for me personally, I like to trade with accounts that are $50,000 and higher when I trade with a prop firm. Like, that is really big to me. I don't want to trade lower prop firm accounts. And I always look at it this way, like, how much money do I want to make? For me, I want to make four figures when I'm trading. That's just me personally, right? But if I had like $100,000 account, let me tell you guys the difference between a $10,000 account and a $100,000 account. Really quick, I'll give you guys one example. So if you had $100,000 and you risk 1%, that's $1,000. And what that $1,000 means is that you can't lose $1,000, but you'll make more than $1,000. So trading with a five-figure account off the rip with a prop firm guarantees you four figures. So you need one trade to reach four figures. Y'all see what I'm saying? And the prop firm says the same rules they have for the $10,000 account. Now they want you to make $10,000. So if you have to make $1,000 with the prop firm, just add a zero to a $100,000 account. Same rules are going to apply, right? So if I had that same trade and I was risking those same 30 pips, right? Then what's that math, you guys? What is $1,000 divided by 30 pips? Somebody get me that. I think it's what, $333. I'm actually gonna do the math on my side. So 1,000 divided by 30 pips. Yep. My lot size will be 33.3, right? So $33.33, but my lot size will be 3.33. So I'm going to be risking three standards, right? So 3.33. And guess what? If I still made those same 100 pips, then I'm going to profit $3,333.33 versus the $333 on the $10,000 account. Do y'all see what I'm saying now? Like, are y'all picking up what I'm putting down here? Because this is the difference. And this is why, like, I say small accounts are out and prop firms are in. Is this easy to do? No, because it's really psychological as well. But can you do it? Yes, you can do it. But if you sell yourself short, if you cut yourself short, if you don't go for what you're supposed to go for, If you don't use your full risk percentage, if you're afraid, you won't reach the value. You won't reach your four figures. You will sabotage yourself. How do I know? Because I've sabotaged myself before. Trading really is mental. It is so mental because the market is going to be the market. The market's going to be the market. But it's all about how you trade it, how you see it. You have to want it. You got to want it, right? Now, let's talk about focusing on higher reward to risk opportunities. Because if y'all want to make these amounts, if you want the higher reward to risk, you cannot scale down your take profit. You can't. You cannot belittle your take profit. You got to minimize your stop loss, right? So I want you guys to comment below if you know, like, just if you know what your minimum reward to risk is, if you know the amount that you're willing, if you say, Shaquan, my minimum is a 2-to-1 or my minimum is a 3-to-1. If you know what your minimum reward to risk is, comment it in the comment section. Let me know what that is, okay? I want to know what that is. I want to know that you have a criteria for yourself. You got a limit right here. You're telling yourself, Shaquan, I can't go below this. Because if I go below this, I'm not giving myself the best opportunity to make more money. I'll tell you guys why I'm saying it this way. Last year and before, like all the years previous before this year, I was only taking 1-to-1 trades. That was it. 1-to-1 trades. Like it had to be over a 1-to-1, but I would stop at a 1-to-1. And what that was doing was getting me in and out of my trades really quick. But here was the problem. If most of my trades are less than a 2-to-1 because I'm willing to accept a 1-to-1, if I go through a losing streak, I'm going through a losing period of drawdown after drawdown after drawdown until I realize, wait a minute, Shaquan, you need those 2-to-1s. You need those 3-to-1s. You need those 4-to-1s. Because when you go through a losing period, which all of us traders do, baby girl, you need to have more money to seed you, to keep you profitable. You see what I'm saying? And that was the thing that I was messing up myself on, right? I was messing myself up. So now my minimum is a 2-to-1. That's my minimum. Okay. So the problem though is this. If you can't hold your winning trades, the losing trades will take away your capital. They will eat your capital. So if you're a person who, like, once you're in profit, you're moving your stop loss to break even, and then it gets triggered. If you see that happening a lot, you're afraid to hold your winners. That's psychological. If you're a person who, once you're in profit, you're like, I got to snatch it. That's psychological. Because if you were supposed to get the $2,000 trade and you only settled for $600, what happens when that $1,000 loser is around the corner? Now you're in drawdown when you could have been up in your account. Does that make sense how I'm saying it? And it honestly doesn't matter the amount. It really does. It's about this here. It's about your mentality. It's about the way you're looking at your positions. It's about saying, man, I know I'm in profit. Like right now, if y'all look at my GU trade, like I'm in profit right now, a couple $100. This is going to be towards a $2,000 winner, right? But just because I'm in profit don't mean I'm going to touch it. If I lose, I'm okay with losing 1%. I'm fine with that because I still have another trade on another currency pair that's actually up towards $1,000. You see what I'm saying? So I'm okay. I'm fine. Like you have to mentally say to yourself, like, I'm okay. I'm okay. I'm okay because I have a good plan and I have a good strategy, right? Because higher reward to risk trades, you guys, is going to motivate you to stay in your trading career longer. Not only that, if you lose a trade, the winning trades keep you profitable. And the only way to get out of drawdown, you need higher reward to risk trades. So if you're the one sabotaging yourself, here's a few things you can do. If you've been sabotaging yourself, if you're not holding your winners, if you know you can make four figures, but something is holding you back, stay away from subpar trades. Anything under your minimum reward to risk, you're not going to take. That's a subpar trade. That's a trade you're forcing yourself to get into. Okay? We don't want to trade with force. And also, too, don't take trades that don't fit your rules. If there's a trade that's not fitting your rule just so you can say I can be in it, it's not worth it. It's not. Now, the big part that we got to talk about today, besides position size, are how the heck do you get higher reward to risk trades? Now, that's the fun part. I've been loving experimenting with this as well. Like that's my goal, is to get higher rewards or risk trades, to get better, right? One, use multiple time frame analysis to shorten your stop loss, right? So I told you guys earlier that I'm a swing trader. I look at the monthly time frame, weekly time frame, daily. Most of my trades are entered on the daily, 12-hour, and 4-hour, right? Now I use pending orders. So I'm not always there to manually enter trades. So most of my trades are pending orders, right? But the one thing that I've been learning how to do is I've been learning how to use multiple time frames to really get in on those lower time frames, my 12-hour and my 4-hour, to get my stop losses down to like 30 pips or 40 pips, right? And my take profits are like 100, 200, 300, 400 pips, depending on like the pair that I'm trading, right? So that's one thing that I'm learning how to do. Now, some of you guys may think that 30 pips or 40 pips or 50 pips are higher, like in stop loss. But if that's the case, remember, I'm a swing trader. I'm on higher time frames. If you feel like that's too high, to get that stop loss down, to minimize your stop loss, you may want to drop down in time frames, right? I have students who go from the 4-hour time frame down to the 15, and that's their preference. They analyze the 4-hour, they're entering on the 15-minute. They're scalping or day trading, depending on how they feel, right? But the main thing I always, motivate my students to do is listen, but still hold your trade. Because if you're cutting it short in fear of losing the profit, you're going to stall yourself from your 4 figures. Or you're not going to make as much as you could because you're trying to control an outcome that you can't control. Y'all see what I'm saying? So that's one of the best ways to do it. Now, I know some of you guys may even ask, like, what time frame should I trade? And it's honestly based on your trading style. But still, I want you guys to think about it this way. If you're on one time frame and you are analyzing it, right? One of the best ways to also increase your risk to, your reward to risk, is to also increase your take profit. All right. So here's an example. Here's something that I like to do. I like to use higher time frames compared with the tool for my take profit, right? And I use my TMP strategy to be able to do so. So I'm not shrinking my take profit when I go down in time frames. And I need to talk to you people who do this. If you are a trader and every time you go down in time frames and you're adding market structure, stop that. Okay? I can't listen. Some of you will agree with me on this. Some of you will not. I am perfectly fine with a disagreement. But do not trap price. Price flows like water. There is no such thing as a break and retest until you say it's on your chart. Okay? The line that you put for support and resistance does not exist until you put it there. Because without that line, with or without it, price will move past it. That's just price. It flows. Okay? But if you're on a higher time frame without even putting anything on your chart, if you can see that price is trending, and if you can see a clear direction, you can extend that take profit. Ask me how I know, because I do it in the market almost every week. Okay. If y'all ever look at my charts and the way I trade, my charts have no stopping point until I put it there. But it's always based on the Fibonacci. And that's an example. That's a tool or reference you can use. Like if I needed to trade past a specific target, like if I know price can make a potential new low or a potential new high, I'm going to use that Fibonacci tool to expand. That's what a Fibonacci expansion tool is for, to expand or extend the take profit, to milk more pips out of the system. I want to milk more pips out of the chart. Y'all hear what I'm saying? Okay? But if every time you drop that in time frame and you're putting another line, another trend line, you can be decreasing your take profit. Just think about it this way. If you see a target that's like, let's say a fewer pips than what you're normally used to on a higher time frame, trade to that time frame. Just drop down in time frames to get a better entry, close the gap of the stop loss, and whatever time frame you use to analyze that deeper take profit, trade to it. So if you're analyzing the daily, you don't have to drop. Let's say I'm just going to use an example. If you're a support and resistance trader, because that's what most people are. I don't trade support and resistance anymore. But if you're a support and resistance trader and you're used to placing support and resistance on your daily time frame, cool. You have daily time frame take profits, right? Because that's what you're using them for. So when you drop down to the 4 hour, instead of placing new levels in between those daily levels, just enter the trade on the 4 hour at your levels and trade down to your daily levels. You will thank me for that later. Okay? Thank me for that later. Because some of y'all cutting out your rewards. All right. And then once you get out of the trade, now you got to go find another trade. You make more money when you can stay in. Ask me how I know, because I'm a swing trader. All right. And what I tell my students is this, like, I'm a scout. That's what I tell them. If you ever seen an eagle flies high and their scouting was on the ground, they can see everything that's below. They can see this big, beautiful world. But if you're walking or you're in your car, you can only see what's in front of you. And that's like a day trader and a scalper. And I tell my people, let me be the scout for you. And if you want to play the day trading role, if you want to play the scalping role, I'm cool with that. But somebody got to scout for you. All right. So I want you guys to think about that when you're trading. Okay. Scout. That's how you get bigger profits. Okay. And try using a Fibonacci tool because it's such a cool tool. All right, y'all. We're almost done here. I did not know I had a lot. How long I've been talking for? 41 minutes. Oh my God. Yeah. I feel like I'm talking a lot though. He asked me how I know. I like that. mm, I like that. All right. I didn't know I was talking for so long. All right, y'all. Let's go to this next point. Okay. This next point is quality trades and four-figure planning. I think we should all plan our trades. You should not be trading if you can't plan a trade. If y'all were in my last live session on YouTube, even on Instagram because I saved it, if you need help learning how to plan your trades every single week, I highly do encourage you after this live to go watch that live session. I think that one was about an hour and 20 minutes long. Um, but yeah, like you just gotta set yourself up for profits. Losses are gonna happen, but you gotta set yourself up for your best trades. All right. So here's three purposes of quality trades and trade planning. Number one, um, when the market is trending, it's easier to profit and make your money so that when the market is quiet, you can chill. I want you to hear. I'm gonna say that again. When the market is trending, it's easier for you to make your profits. So when the market is quiet, you can chill. You don't have to force trades when there's something going on, right? So let's just say, for example, you have a $10,000 account, you just made $700. But this week, there's nothing to do. So instead of trying to force a trade this week when there's something to do, you chill, right? Let's say you have a five-figure account. If you just made, let's say, $5,000, if there's something going on in the market for that week or those 2 or 3 days, you just chill because there's nothing to do. Your high quality trade ideal has not set up yet, right? So you don't have to force a trade. Hey, Benjamin, how you doing? Okay, so I want you guys to think about that as well. All right. Now, the second purpose of high quality trades is that high quality trades give you back to back rewards when the market is trending. If y'all look at my price chart, if you're with me on YouTube and Trading View, I've been trading pound USD to the downside because she's been trending. So right now, in this season, in this moment, she is giving me something to work with. And when she stops giving me something to work with, I stop trading her for that season. I stop trading her for that time. I chill on her. You see what I'm saying? So that's why when our high quality setups happen, we can be ready for them. And you should always want to be ready for your high quality setups, right? And the last thing too with this part is high quality trades, they help you avoid making trading mistakes. Don't fight against your money. That's what trading mistakes are. When you fight against your four figures or your three figures, or the case may be, y'all don't fight yourself. Don't fight your trades. Don't get in the ring with the market. The market will always win. It's like a casino. The house will always win. No, it's not your game. You see what I'm saying? So don't force it. All right. Now, here's my thing too, and this is a really big thing because if you're trading with prop firms, this can save your prop firm. All right. Commit to making four figures and stay under your drawdown limits. The biggest reasons for me, because I've won challenges, I've won trading accounts with prop firms, I've lost a lot of trading accounts with prop firms. And the biggest thing that I had to learn was play their game. In my personal account, when I'm trading my own money, I normally risk 3%. But I can't do that with the prop firm account. I just can't, because they're going to take my account. Okay? Like, I don't need one losing trade to set me back. Not that high of an amount. That's the biggest thing, right? So what I do is when I'm planning my trades, I plan every single Sunday. I map out how much I can potentially make and lose. But that's based on my opportunity. So that's one of the first things that I do. I plan every single Sunday and I map out how much I could potentially win and how much I can lose. That's the first thing I do to plan out my trades. Then the second thing that I do is I identify how many high quality opportunities I have. So if I'm at my chart, I only trade 4 currency pairs right now. If I only see 2 opportunities, I only have 2 opportunities. That's it. No more, no less. I'm fine with that. Right? No more, no less. Just 2. Or just 1. Or maybe all 4 for that week. Who knows? But I'm mapping that out. Then here's the biggest thing. I need all y'all to write this down if you got pencil and paper. I allocate 1% to each trade if my account is in profit. That's the biggest thing. I didn't say drawdown. I said in profit, because that's a whole nother class. That's a whole nother master class. All right. If my account is in profit, I'm not in drawdown. I allocate 1% to each trade. Now, the biggest thing that I ask myself is this. I ask myself 3 questions, and here's the 3 questions I'm going to give y'all. Is each opportunity over my minimum reward to risk? Remember, my minimum reward to risk is 2 to 1. Yeah, right? Like, I want you to remember that. It's a 2 to 1. If that opportunity is not a 2 to 1, I don't trade it. I don't even look at it anymore until price moves and proves to me I can get more than a 2 to 1. That's when it intrigues me. It has to interest me. It's like a man. Like, I'm an adult, okay? But for a male to talk to me, for a man to talk to me, I got to be intrigued by them. I could speak to anybody, but for my attention, I need to be intrigued by you. You see what I'm saying? I need to know we can have a conversation. Should be opposite from men to women as well. I need to be intrigued. You need to deserve my time, basically. Deserve my attention, basically. Y'all see what I'm saying? Now, the next thing I ask myself is, will each opportunity get me closer to reaching 4 figures? That means that when I put that 1% on that trade and I know how much I'm losing, well, how much am I making? Am I about to make double, triple, quadruple, cinco? Like, what am I going to make? Is it getting me closer to my 4 figures in that one trade? You see what I'm saying? Or in these trades, these group of trades, can I reach 4 figures? That's what I'm asking myself. Okay. Then the last question I ask is, am I okay with the possibility of losing these opportunities, but will it still keep me under my drawdown limits? Remember, I told y'all that I don't want to reach my daily drawdown limit. So if I'm at a threat of losing like this account in like 3 trades or 4 trades, something has to give. Something got to give. Y'all see where I'm going? Okay. Daniel asked me, if you are in a funding challenge, it's almost possible to reach the target. It is true. You can reach with 1 or 2 trades. You can. If you have a 10 to 1 reward to risk, or if you have 2 trades that equal 10 to 1, but you have to have that, right, Daniel? You got to have that. Some traders don't. Some get by 2 to 1 reward to risk. Some get by 3 to 1. It may take them 3. It may take them 4. But you still got to count losses too. You see where I'm going? You still have to count losses because that's big as well. But those are the 3 things I ask myself when I'm planning out my trades, right? Is this an opportunity that's over my minimum reward to risk? Will each trade get me closer to my 4 figures? And am I okay with losing these trades? Those are the questions that I'm asking myself. All right. Now, here's the thing, you guys. Is this easy? No, because you're going to make mistakes. You may not enter every trade that's your best trade. You may exit your trades too early. You may risk more than you should. You may not trade in the best market conditions, and you may go through a natural losing streak. You might go through a losing streak. And that's inevitable because all traders go through those streaks, right? But the thing is, it's all about how you manage it because the only thing that can keep you from your four figures, from your best trades, are you. You're the only one who can keep you through that, who could keep you from that. But if you focus on higher reward to risk trades that can keep you in profit, focus on those. If and here's the biggest thing with prop firms too, because then you just said something as well with your funded challenges. For me, I choose prop firms with relaxed minimum trading days. Like I don't want a two-phase verification. So I purposely trade with a prop firm that has one single phase. I also trade with a prop firm that has no minimum trading days. So I'm not on a 30-day limit or a 60-day limit because that mind boggles me. Because being a swing trader, one of the reasons why I also lost a few of my prop firm accounts was because of time limits. I'm like, wow, okay. Because as a swing trader, sometimes depending on what time frame I'm looking at, I don't know how long I'm going to be in those trades for, especially if I analyze the monthly and the weekly time frame. I have no idea. Y'all see where I'm going? So you got to find a prop firm that's also going to mesh well with you. And then to choose higher quality trades over quantity, the understanding that I may not have a trade every single day. And I had to really, really learn that. I really, really did. Okay. And so when I found a prop firm that had one single phase minimum trading days, their drawdown limits are smaller on their experienced account. Like my overall drawdown is 6%. My daily drawdown is 3%. But I had to remember, if y'all only going to give me one phase and no minimum trading days, I got to play your rules. I got to play by your game. But if I wanted to use their advanced program, it'll be like most accounts where I have to risk 10% and then a 5%. Y'all see what I'm saying? So you got to choose the prop firm that's going to mesh well with you. Because me trading my own money is way different than me trading it's way different than me trading a prop firm. So it's different rules and I can't cross those rules. Y'all see what I'm saying? Okay. So I'm going to answer y'all's questions because this was fun. All right. And while you're asking your questions, you guys, my community is actually up, but I got to get my students from the community from my other platform over first, but it's up. It's on my website. Okay. slfxtrading.com. I'm excited if y'all join. If you decide you want me to coach you, I would be excited to have you. Okay. But I'm still working out a few kinks in this because I'm moving platforms over. And y'all know if you're in business, when you move systems and platforms, something breaks. So I'm just waiting to see what's broken so I can fix it. Okay. But June 11th is going to be our very first masterclass. And the class that I'm going to be doing there is I'll be teaching on how to identify high quality setups or high quality trade ideas using multiple time frame analysis, going from the daily to the 12 hours to the 4 hour. Because one thing about it, and I get a lot of questions about this, is how do you know when the market is trending on different time frames? Because it looks like different time frames are trending differently, and they are not. They are not. And so I want to focus on price action on those time frames and focus on what it looks like to take trades and really close the gap of that stop loss if you're analyzing the daily and you're having to drop down, but how to pair your time frames together. And then our next class is going to be on reversals because there are different rules when price is trending and then when price is reversing. And so those are going to be like our next two master classes coming up. And if y'all know anything about me, my classes are taught live. So when you come into the group, there are videos you have to watch on how I trade my system. But any class I teach outside of that is live because you're going to have answers or questions at the time that I have to answer, and I want to answer them. Okay. So let's get into some questions. Someone asked, what prop firm do I use? I use Funded Trading Plus. If because you're asking me this on Instagram, if you go to my Instagram, the link in my bio, it's actually in the link in my bio, and you can use a 10% code because I like to save y'all money. right? I love saving people money. So yeah, go to the link in my bio, because that link in my bio will change soon, because when I change my platform over to my website where the community is going to be, all of those links are going to change. Okay, so if y'all are wanting to know what platform I use, Funded Trading Plus, save 10%, you guys, because if you're going for a $100,000 account, that's $499. Okay, well, buy it for 10% off. If you're going for a $200 account, that's $999. Okay, save 10%. That's almost $100, right? So I like to save people money. So go ahead and do that. All right. Are there any questions? I had seen a few. I'm gonna move Instagram over closer to me because I saw a question in here. Star Walk say, I have a problem. I want to ask questions. What's your questions, honey? You really adamant. What's your question, sweetie? And who is this here? If you're on trading, if you got questions, for some reason I can't see y'all's questions. I have no idea why. I have no idea why. Bu- 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 Deirdre asks, is this masterclass from someone who has not traded? Yes. Anytime I teach, I take my time because how can I put this? I never know where people are when I teach, right? Um, Sorry, I just got a call. But I just never know where people are when I teach. And so anytime that I'm teaching, I always make sure to think, okay, Shaquan, well, this person may be light years ahead. This person may be a beginner. This person may know some things, right? So anytime I teach, I always try to make sure that it's the most basic and then it goes into the advanced. That's why when I do this masterclass, it's first starting with the trending market, because if you go through the videos with how I teach, and one thing about it, you guys, my attention span is so short. My God, is so short on some things. I don't like long form content videos, right? So my videos in my community are not even long because you got to get to back testing. I'm very adamant about back testing. I even show you how to back test quickly because our attention spans as humans are so short, right? Now they're getting shorter. And so I always make sure that it is for a beginner or a person who's never traded, because the main focus in my classes are never entries first. It's always the knowledge first. And we talk about entries along the way. Then once I get done with this master class, you gotta back test. Like, that's gonna be a main requirement in my community. I gotta see that you're putting in effort because you're paying for the community, right? The community is a one-time payment. So you're gonna be paying to be in there, right? So when you're in there, I want to see you're doing the work because you're going to have questions. I'm going to be the one answering those questions, right? Or someone in the community may be in there to answer your questions. But the main thing is you can't just ask a question. I need to see what the question is about. You got to compare it with the chart. You see where I'm going? That way you get the best answer. Okay. And then we move into an advanced master class a few weeks later, when I talk about the reversal, because reversals are a whole different process still using my TMP strategy. Because there are some things that I've learned as a coach. Some things need videos, some things need live teachings. You see what I'm saying? So that's the thing there. Hey Star Walk, how are you doing? What's your question, sweetie? What question do you have? Type that out for me. Type your question out. All right. Do do do. Thank you for the compliment, Val. I really appreciate it. I really do appreciate it. And are there any more questions? Thanks. I'm actually a beginner. Hey, and welcome to trading if you're a beginner. Anyone here who's a beginner, welcome to trading. I've been trading for quite some time now. And one thing I learned is that everything is becoming so advanced now and so fast. And man, trading, you really got to find your edge in it. There are like so many strategies out there. And the biggest thing that I tell a lot of traders are one, find what works for you. If it's support and resistance, trade that. I trade supply and demand in my understanding, trade that. I trade that. I don't trade trend lines, but if you're a trend lines trader, trade that. whatever it is that you understand, but then make yourself the expert. Don't stay under someone else's shoes. So that's the thing. All right. Starbuck, if you have a question, place your question. You're going around what you need. If you got a question, ask the question in the text, sweetie. So that's going to be very important. Okay. Any more questions before we go, y'all? Any more questions? Oh, and then one more thing too, if you are a beginner as well, if I can give y'all a key piece of advice is to back test. You do not have to spend hours back testing. I have a 10 trade theory. I have a theory that if you could back test 10 trades a day or 10 trades every other day, and by the end of the month, you know, maybe have a collection of like, I don't know, 120 to 300 trades, that'll tell you everything you need to know about yourself as a trader and about your system and how well you're doing. You see what I'm saying? So that is the biggest thing, back test. FJFX Freak X. I like your name. Y'all have some wild names. I have a question. Isn't support and resistance same as supply and demand, sis? Yes and no. This is so interesting. Okay. I'm going to ask you a simple question, and I want you to answer this question. What is support and resistance? In your understanding, what is support and resistance? Answer that one question. Someone said support and resistance is something bank fish for liquidity. Is some Are you saying support and resistance is bank fish for liquidity? I'm trying to see what you're saying here. Or are you saying it's light bank fish for liquidity? But no, but yeah, but seriously, everyone answer that question. What is support and resistance? Now, let me talk about the concept of supply and demand. Daniel said it's a concentration of demand and supply. Okay, well, Daniel, I want you to ask this question: then, what is supply and demand? I'm asking, do y'all hear how they're two separate questions? Like, y'all hear how they're two separate, right? They're two separate questions. So if they're two separate questions, they're two separate uh types of strategies because they're going to be used differently. Okay, they're separate. All right, floor and ceiling. I knew somebody was going to say floor and ceiling. I knew somebody was going to say floor and ceiling. Okay, what is the floor and what is the ceiling? And now relate it back to the forex market. Star Walker, sweetheart, if you cannot ask me a simple question, we don't have a conversation. I'm a very simplistic woman. I don't do the back and forth like this. If you have a question, ask it. If you can't ask it, we don't have a conversation. You got to respect everybody else's time too. Okay? But yeah, but what's a floor and ceiling though? Now, now relate it back to the market now when you say it, Ryan. Relate it back to the market. Because I don't see a floor and ceiling on my price chart. Or even on yours. I don't see floor and ceiling. I don't see floor and ceiling. Like, let's talk about it. Okay, now so FJFX says, to my little understanding, I think support and resistance is when price gets supported at a given level, and resistance is when price gets rejected. So what's a level? Everything you give to me, I'm going to ask questions back, and it's for a really good reason. What's a level? What's a level? Okay, he asks, what if you're trading news? If you're trading news, you're a fundamental trader. I personally don't trade news. I have people who do, but if you trade news, you're a fundamental trader. Now, as far as support and resistance and supply and demand goes, let's first talk about supply and demand. Okay. If it's hard to trade news, don't trade it. Simple. Um, but when it comes to supply and demand, think about what supply is. In the real world or in economics, supply is inventory. Okay? That supplies, what's being supplied. Okay? We trade currencies. I used to work in a bank where I dealt with foreign money. All right. I dealt with euro. I dealt with Australian dollar. I dealt with the pound. I dealt with dollars. So I was trading different currencies. And if we had to get other currencies in, we had to basically ask other countries to send them in. Right. And then I would exchange them over the counter, OTC. Right. So I did that in a bank when I worked in Germany. Now, I'm telling you, I did this in real life. Okay. So now, excuse me, some people come in and they want to exchange currency. That's the demand. So I am there to sell them the currency. They're there to buy the currency. Y'all see what I'm saying? So I'm supplying what they're demanding. I hope y'all picking up what I'm putting down because it's a whole new class too. Okay. I'm supplying the currency that they are demanding, that you're buying, and I am selling it to them. Okay. That is supply and demand, and that is what we do on the charts. So instead of you guys going to the banks to do it or to work to do it, which what I did in real life years ago, you guys are doing it on a price chart, but you're using your own money. So the supply in the foreign exchange market are the currency pairs, and there's people who are buying them at specific prices. There's always a buyer in the market. The banks are the ones who are selling it. Okay. So now when you think about it this way, supply and demand, as a trader, when the price of a currency goes down, you're selling that information. When the cost of the currency goes up, you're buying the information. Okay, you're buying the change in exchange rates, or you're selling you're selling the information of exchange rates, but that's supply and demand. Okay, that's what it is. Did y'all pick up what I put down with supply and demand? FJ says, whoa, you're really a teacher with questions, but that's how far I can explain. Now watch this. You want to know why I ask questions? You need to ask yourself questions. You know what makes me a good coach? Because I look to see what you know and how much you know, and then I fill in the missing gaps. I'm not here to just tell you what I think I know. I'm here to see what you know and what you don't know and fill in the missing pieces to make you better. And then you, in return, figure out what I just said, how to say it to yourself, and then how to trade it. Relate it back to the market. You see what I'm saying? So that's really important. The same questions you just asked me, ask them out loud. And then go get the information, but make sure it's understandable. Okay? John said level is places is place price has respected a couple of times. Now, that's support and resistance. Let's talk about the difference now with support and resistance. Thank you for saying that, John. I truly appreciate your input. Support and resistance says, hey, in the past, price went to this particular price point or these particular range of pips. We've seen when the buyers came and pushed price off of these exchange rates. We've seen when price could stay above these exchange rates. We've seen when price could stay below these exchange rates. But if price comes back into these ranges again, we think that there's going to be some type of sell off or some type of buying pressure from the buyers. That is support and resistance. Okay. Now let's relate it back to supply and demand, because you can trade these two separate ways. There's an understanding of supply and demand in support and resistance, right? Now, um, if you're trading support and resistance, you have to look left. I think supply and demand traders do a good job at staying to the right. And that's one thing I teach. Don't go to the left if you're a supply and demand trader, because support and resistance traders trade for what happened in the past, while supply and demand traders trade for what's currently happening. Do y'all see how those two are different? Two different concepts. Two different concepts. Also, with support and resistance traders, and if you've been there, say, yeah, I've noticed this. With support and resistance traders, sometimes you guys look for support and resistance levels first and not trend. You guys just buy and sell from level to level. With supply and demand traders, we have to focus on the trend first. So support and resistance traders, sometimes y'all get lost in the trend, and you guys are the ones who's mostly trading break and retest. But if you're a support and resistance trader and maybe you see that you're losing more than you're trading, it's because you didn't focus on trend first. Sometimes you go too far to the left. Sometimes you put too many levels. But with supply and demand traders, because we focus on what's happening now, our charts are very clean and simple. And we focus on what's happening now, and we don't have to focus on too many terms in the market. It's kind of easier to trade supply and demand. I know what the way I trade and teach it does. My charts are very clean. Like I just can't do congestion on the charts. Like if y'all look at mine now, there's no levels. There's only like I have two price note tools. I do have those dots, but if I drop that in time frames, they're gonna change the price note tools. Like this one, I have one line. It's supposed to be a zone, but I just put a line there, and that's it. And y'all can see that I don't have any level that says stop trading right here. I let price flow, right? And as long as it's in profit, I'm cool. FJ says, but how can you know what's happening currently when it hasn't happened at all? That's support and resistance too. Think about it. You had to go in the past, but what's in the past may not happen in the future. Same thing as supply and demand. Baby, nobody knows. Honey, nobody knows what's going to happen. Okay? But watch this. If the market is trending, I already have a leg up on you because I'm going to go with the people. Like if price in a downtrend, look at GU. I'm just going to keep selling until the buyers take over. If price was in uptrend, look at USDJPY. Look at USD Swiss right now. I will be a buyer because I'm keeping it simple. If the buyer's in control, just keep trading with the buyers. That's it. Okay? That's it. So, two different mindsets when trading support and resistance for supply and demand. And honestly, that's why for me personally, I stopped trading support and resistance. I didn't want to keep. I just had too many questions with support and resistance, and with supply and demand, it's just easier. There's limited questions. You see what I'm saying? I'm actually gonna let you on here too. If you keep it simple, I'm gonna let you on here. Let's see what you're talking about. I don't know why it won't let me accept you though. Let me see. There we go. Hey, can you hear me? Yeah, I can hear you. Yeah, how are you? Fine. Yeah, what's going on? I'm okay. You got a question? Okay. You just switched to just me, or is this also part of the live session? Mm-hmm. Okay. So that was my question. You kind of breaking up, sweetie. Can you hear me? I can hear you. It's just breaking up a little bit. Okay. Maybe it's yeah, but you said that was just your only question? Yeah, that's just my question for now. Okay. Actually, not for now. I've not been trading for long because just recently, but I've been losing a lot. Mm-hmm. Yeah, a lot. So, but I'm still actively learning. Mm-hmm. Still actively learning on my own. Mm-hmm. So I don't really have a coach, but I think from what little I've gained from just this live session is quite helpful. Mm-hmm. These have come to understand more how support and resistance work, and I'll try to apply it in my chat maybe next time I'm. Yeah, apply it and let me know. And anytime that I'm live, on Instagram or YouTube or TradingView, get on and ask questions. You see what I'm saying? Just get on and ask questions. Because honestly, sweetie, um, if I can just give you a piece of advice with you being a beginner, whatever you decide to focus on, make that your focus because trading is a business and you have to niche down. You want a primary focus, right? For me personally, I decided to focus on supply and demand because it was just an easier concentration than trend lines, than support and resistance. And it's not to say that those are not successful. It's just to say for me it didn't work out. And so if you were to research other supply and demand traders, you're going to find that everybody trades it differently. But when you see the person who you resonate with, and here's another piece of advice, instead of trying to learn on your own, learn from the person who makes it make sense to you, because they're already years ahead of you. You see where I'm going with that? Trust me, cut the like you trying to do it on your own is gonna take it's gonna take years. Years. Ask me how I know.
You said it though. You said it. You said I can take up to 20 or up to 100 trades.
Mm-hmm.
And it's just, the thing is, I'll just lose, continue losing. I might blow a lot of accounts. I might blow problem accounts. But I just believe if I can continue trading and I'm jotting, I'm taking some notes of why I lost and why I make profit, I can be more successful.
Well, here's the thing, sweetie. Don't do demo accounts or live trades, because 100 trades, if you were to live trade a demo trade, could take time. But here's what I want you to do: back test those. Like, go in the market, go like 3 to 5 years past, and past price movement, and back test your strategy, and get 100 trades from there, 120 trades from there, instead of trying to collect it as the market is moving. You see what I'm saying? What you know what I'm gonna do, and y'all are hearing me say this first because I gotta go in a few minutes. I'm going to back test with you guys. I'm gonna take some time out this month to do a back testing workshop, and I'm going to back test with you guys. I'm gonna show you how it's done, because that way, if you can see how it goes, and you could get some type of help from that, I think that'll work out better. Do y'all think that's a good idea? Yeah, that'd be a really great idea, right? So yeah. So, but I thank you for joining me. I really appreciate it, sweetie.
Thanks for me sharing it all. All this like this. Looking for it, where I come from.
Yeah.
Where I come from. This has really helped. Thanks.
Mm-hmm. It looks peaceful out there, though. I'll tell you that much.
Okay.
You said, it's okay. Well, baby, thank you for joining me, sweetheart.
Okay.
Okay, that was good. All right, guys. But I am going to get ready to go because I got to go pick up my daughter. All right. Summertime is about here, so I have a little bit more time. But I hope you guys did enjoy this live session. If y'all did, add me on the gram. If you're on the gram, YouTube, make sure y'all subscribe to me, Trading View. Make sure you guys follow me as well. I have some really, really, really good content coming out. And thank you guys who joined me and who stayed and who rocked with me. Remember, the community is open, but I'll be putting more information out about that on my social media and through my email list as well, you guys. Okay. Y'all, please go be blessed. Y'all have a good one. Goodbye, everybody. Be blessed, y'all.